We're here with Kim Anderson now to check in on the crop markets. So Kim, at this point in the year, are the crop prices still trading with a pretty narrow range?
For all practical purposes, prices are still trading in a relatively narrow range. Look at wheat prices. They've been trading from $5 to $5.50 in the last couple of weeks. They've narrowed that up to about a 20 to 25 cent price range, just moving sideways. Look at corn. Corn was trading in a 440 to 450 range. It widened that out a couple weeks ago to 435 to 455, but that's still a narrow range, and it's sideways prices, just like wheat. On soybeans, they're really in a narrow range for beans. I mean, $11 to $11.25, and for all, it's down. Bean prices are down now, near around that $11, but still in that narrow range. The one thing we know that's going to happen, we just don't know when it's going to happen, but something's going to happen to get these prices moving again.
So what's happening in the market right now that could cause these prices to change?
Well, what the market's watching right now is they've got the planted acre numbers. They came out a couple of weeks ago. They're watching crop conditions. Our wheat crop's in significantly better condition than it was this time last year. Slightly lower acres. They're watching the weather. You look at the long-term weather, the 90-day forecast. It's for about average moisture and above average temperatures. So the market's concerned about that. There's some talk about it in northwestern Oklahoma and western Kansas about it getting dry and the wheat under stress. One report said that we were switching from El Nino to El Nina, switching from wet to dry, and some people are concerned about that. There's always Russia. Two reports this week, just under 3.4 billion and just under 3.5 billion bushels. A lot of wheat expected to be produced by Russia and put on the market.
So when should farmers think about selling this year's wheat crop?
It's obvious. You look at average wheat prices from 2009 through 2023, calculate your monthly average price and then your average price for the June through August time period. You look at this chart, it's obvious that you should sell your wheat. Unless you can predict prices, you should sell your wheat in the June, July, and August time period. I look at from the average June, July, August period, it's a 20-cent drop to the average September price, and it goes down from there the rest of the year. These prices are for harvest prices for June, July, and August. On out, we've got 5 cents per month storage in them. Our average was $5.83, and it's that throughout June, July, and August. That's when to pull the trigger.
So at this point, wheat prices are a little lower than last year. What do you expect to see in the coming months?
Well, I expect prices maybe go up a little bit. If you look at the harvest price right now, around $5.40. If you look at that June, July, and August time period, on average, you got a plus or minus 90-cent move during that 3-month period. In other words, if you got $5.40 expected price, your low price is $4.50 and your high price is $6.30. And you would expect a $1.90 move in that June, July, and August time period. So there's a lot of movement there. So you need to stagger it up over time during that period.
All right, well, thanks for the updates, Kim. We'll see you next week.